The BRICS Bank, formerly known as the New Development Bank, was established by the BRICS countries, Brazil, Russia, India, China, and South Africa, as an alternative to Western-dominated financial institutions, such as the International Monetary Fund, World Bank, and the World Trade Organization. The creation of the New Development Bank marks a significant step in the BRICS countries' efforts to reshape the global financial landscape and reduce their dependence on the US dollar. This analytical exploration delves into the expansion of the BRICS Bank, its potential to challenge Western financial hegemony, and the implications of a possible new BRICS-led world order. The genesis and structure of the New Development Bank. Establishment and purpose. The New Development Bank was established in 2014 with its headquarters in Shanghai, China. Its primary purpose is to mobilize resources for infrastructure and sustainable development projects in BRICS and other emerging economies and developing countries. The bank aims to complement existing financial institutions and foster greater financial and development cooperation among the BRICS nations. Governance and funding. The governance structure of the New Development Bank is designed to ensure equal representation and decision-making power among its founding members. The bank's capital is subscribed equally by the BRICS countries, with an initial authorized capital of $100 billion. This structure contrasts with that of the International Monetary Fund and World Bank, where voting power is often proportional to financial contributions, leading to dominance by Western countries. Since its inception, the NDB has approved numerous projects across its member countries, focusing on renewable energy, transportation, water, and urban development. These projects are aimed at addressing the infrastructural deficits in BRICS nations and promoting sustainable development. The bank's emphasis on green energy projects aligns with the global agenda of combating climate change and supports the BRICS countries' commitments to environmental sustainability. Initially limited to the 5 BRICS countries, the NDB has expressed intentions to expand its membership to include other emerging economies and developing nations. This expansion strategy is aimed at increasing the bank's global influence and enhancing cooperation among a broader group of countries that share similar development challenges and aspirations. Financial instruments and innovations. The NDB has introduced innovative financial instruments to mobilize resources efficiently. These include issuing green bonds, local currency financing, and leveraging private sector investments. By diversifying its financial instruments, the NDB aims to reduce dependency on the US dollar and mitigate exchange rate risks for its borrowers. Strategic partnerships. The NDB has also formed strategic partnerships with other international financial institutions, regional development banks, and national development banks. These partnerships are intended to co-finance projects, share knowledge, and enhance the bank's capacity to address global development challenges. Can BRICS ditch Western financial institutions? Challenges to the IMF, World Bank, and WTO. The NDB's establishment represents a direct challenge to the IMF, World Bank, and WTO. However, replacing these entrenched institutions is fraught with complexities. First, institutional legacy. The IMF, World Bank, and WTO have decades of experience, established protocols, and extensive networks of influence. The NDB, while growing, still lacks the institutional depth and global reach of these Western-dominated bodies. Second, financial resources. The combined financial resources of the IMF and World Bank are significantly higher than those of the NDB. For instance, the IMF's total resources exceed $1 trillion, providing it with substantial capacity to influence global financial stability. Third, policy influence. Western institutions have played a crucial role in shaping global economic policies, standards, and practices. The IMF's role in setting macroeconomic policies and the World Bank's influence on development agendas are deeply ingrained in the international financial system. Reducing dependency on the US dollar. One of the BRICS Bank's objectives is to reduce reliance on the US dollar in international trade and finance. This goal is driven by several factors. First, currency risks. Dependence on the US dollar exposes BRICS countries to exchange rate volatility and financial risks associated with the US economic policies. Second, sovereignty. Reducing dollar dependency is seen as a way to enhance financial sovereignty and reduce the influence of US monetary policy on their economies. Third, economic diversification. Promoting local currencies and alternative payment systems can diversify global financial transactions and reduce the dominance of the US dollar. Efforts towards de-dollarization. The NDB and BRICS countries have taken concrete steps towards de-dollarization. First, local currency financing. The NDB has provided loans in local currencies, thereby reducing exchange rate risks and fostering local currency markets. Second, trade agreements. BRICS countries have engaged in bilateral trade agreements that bypass the US dollar, using their own currencies for transactions. Third, alternative payment systems. The development of alternative payment systems, such as China's cross-border interbank payment system, or CIPS, is aimed at reducing reliance on the SWIFT system, which is dominated by the US and Europe. Entering a new BRICS-led world? Economic and political influence. The expansion and success of the NDB could signal the rise of a new BRICS-led world order, characterized by 1. Economic power. The BRICS countries collectively account for a significant portion of global GDP, trade, and population. As their economic influence grows, so does their potential to reshape global financial norms. 2. Political coordination. BRICS countries have coordinated their positions on global economic issues, challenging Western-dominated institutions and advocating for a more multipolar world order. 3. Soft power. By financing development projects and fostering economic growth in other emerging economies, the NDB enhances the soft power of BRICS nations, increasing their influence in global affairs. Regional integration and cooperation. The NDB's focus on regional integration and infrastructure development aligns with broader efforts by BRICS countries to enhance connectivity and cooperation within and beyond their regions. Key initiatives include 1. Belt and Road Initiative, or BRI. China's BRI aims to build infrastructure and improve connectivity across Asia, Africa, and Europe, with potential synergies with NDB projects. 2. Eurasian Economic Union, or EAEU. Russia's involvement in the EAEU promotes regional economic integration, which can be supported by NDB investments in infrastructure and development. 3. South-South cooperation. The NDB reinforces South-South cooperation by facilitating financial and technical exchanges among developing countries, fostering a sense of solidarity and mutual support. Technological and digital innovations. The NDB's embrace of technological and digital innovations can further its impact and global reach. 1. Fintech solutions. Leveraging fintech solutions can enhance financial inclusion, improve efficiency, and reduce transaction costs for NDB projects. 2. Blockchain technology. Blockchain can provide secure, transparent, and efficient mechanisms for cross-border transactions, reducing reliance on traditional banking systems. 3. Digital infrastructure. Investing in digital infrastructure can support the growth of the digital economy in BRICS and other developing countries, driving economic development and innovation. Environmental and social sustainability. The NDB's commitment to environmental and social sustainability sets it apart from traditional financial institutions. 1. Green financing. The bank prioritizes green financing, supporting projects that promote renewable energy, energy efficiency, and sustainable development. 2. Social impact. NDB projects aim to create positive social impacts by improving access to essential services, enhancing quality of life, and promoting inclusive growth. 3. Climate change mitigation. By funding projects that reduce carbon emissions and enhance climate resilience, the NDB contributes to global efforts to combat climate change. Conclusion. The new development bank, as the financial arm of the BRICS countries, represents a bold and ambitious effort to challenge the dominance of Western financial institutions and reduce reliance on the US dollar. While the NDB has made significant strides in financing development projects and fostering cooperation among BRICS nations, it faces substantial challenges in replacing the entrenched global financial order. The potential for a new BRICS-led world depends on several factors, including the NDB's ability to expand its membership, innovate in financial instruments, and leverage strategic partnerships. Additionally, the success of de-dollarization efforts and the adoption of alternative payment systems will be crucial in reducing dependence on the US dollar. Ultimately, the rise of the NDB and the BRICS countries' collective efforts signal a shift towards a more multipolar world, where emerging economies play a more significant role in shaping global economic and financial norms. While the path to a new BRICS-led world order is fraught with challenges, the continued growth and influence of the NDB offer a glimpse into a future where financial power is more evenly distributed across the globe.